My name is Rick Blanke, Managing Partner of Blanke Schein Wealth Management. Thanks for tuning in to the next installment of our Financial Foundation series. In this episode, we're going to tackle life insurance and the basics of life insurance. We've noticed a trend actually over the last couple years, but again in the last couple weeks that has a lot of younger people, younger demographics interested in life insurance. I think as we'll touch later on, COVID really put the thought in people's minds about maybe the necessity for life insurance. So we're going to discuss the ins and outs. Look forward to talking about that. So what is life insurance? Well, life insurance is a contract between an insurer or an insurance company and a policy owner. And what happens is the policy owner, so you or me, we buy a policy. Let's just say, for argument's sake, it's $1 million policy. We're either going to pay a single upfront premium or we're going to pay ongoing premiums. But basically, we're going to pay for $1 million policy, which says if I pass away unexpectedly, that $1 million death benefit is going to be given to my beneficiary, whoever you name as your beneficiary, whether it be your spouse, or a child or a family member, whoever it is, you name it. That's what the insurance contract dictates. Now, it's an important piece to remember is an insurance policy is only as good as the insurance company that you're using. So it's definitely important to do your due diligence and to look into the different companies. But that is definitely something we can assist with if you wanted to go down that path and explore those options. Okay, so now we're going to talk about a change in the insurance industry overall. I alluded to it a few moments ago when I discussed the impact that COVID had on insurance applications and kind of the dynamics. Historically, younger people have shied away from purchasing life insurance, at least in comparison to other demographics. But I did write down some numbers that I'm going to be glancing down at. And it's interesting because when just regarding applications for insurance, 2020 saw a year-over-year rise of 4% in applications. That is the highest on record. And a big proponent of that is people under the age of 45 had the highest application activity with a 7.9% year-over-year increase, which is very, very interesting. So you're seeing not only an increase in applications for insurance, but you're seeing a drastic increase in the younger demographics. And then carry that over to 2021, you also saw a year-over-year increase of 3.4% regarding these applications, which is the second highest on record. So we are seeing a shift in the industry. People are becoming a little more self-conscious about insurance and the need to protect in case of these, morbid, terrible situations. But I guess the silver lining is people are becoming more prepared with regards to their finances, and it's actually a good shift. So now we're going to move on and discuss the two main categories of life insurance policies. You have term life insurance, and then you have a permanent life insurance. And each one, in particular, the permanent life insurance has a bunch of subcategories. But first, let's discuss the term insurance. All that is you're buying insurance for a period of time. Call it 10 years, 20 years, 30 years, whatever it is, and you're making premium payments over that lifespan. And once that lifespan is over, coverage stops, and then if you want to re-up, you have to go through the process again and get another insurance policy. So the second category of life insurance is a permanent life insurance policy. And what that is it stays in force for the entire life of the policyholder unless the policyholder stops paying its premiums or surrenders the policy. These are generally a little bit more expensive. But also under this same umbrella, we have whole life policies, we have universal life policies, and we have variable life policies. So we're going to briefly touch on each of those. So let's discuss briefly whole life policies. Whole life policies are a type of permanent life insurance policy, but it accumulates a cash value. And that cash value is important because it can be used for a number of things like it could be a source for loans. It could be also pay for the policy premiums. Next, we're going to discuss universal life policies. These are also permanent policies that have a cash value that earns interest. The interesting dynamic with universal life policies is they have flexible premiums, and they also can be designed with either a level death benefit or an increasing death benefit. Lastly, we want to discuss variable life policies. These are also kind of an interesting take. They're also permanent policies that have a cash value. But what's different is that cash value is then invested into different sub-accounts, which are kind of like mutual funds. So you have this investment side, this market side, mixed with an insurance wrapper. So the topic of life insurance is normally kind of a difficult discussion, right? It's a little morbid. It's not exactly the greatest thing to sit around and think about, but it is necessary. And what we're seeing, as I mentioned before, is a shift, and people are starting to believe and plan accordingly. That, you know what, life insurance may be a part of my financial planning picture, and we support that. So, you know, if anybody does want to have the conversation about is life insurance right for me? I mean, it depends. Some people, it all depends on your financial picture. But it is a conversation that we are more than willing to have, and we can discuss in detail, and we'd love to have that conversation. So please feel free to reach out. We'd love to talk to you. Thanks.